The Silicon Valley bank collapse. How does that affect you if you are a homeowner, home seller, or a home buyer right here in Arizona? That's what we're going to get into today. Talk about that, what it has done to mortgage rates, and what it looks like to buy or sell a home in this market here. Welcome back to the channel. My name is Rich Brecklin, your Arizona real estate agent with Real Broker. Now, if you're not aware, the SVB Bank on Friday, some huge news happened. And if you've been watching this channel over the last few weeks, I've discussed rates and the trend that we were seeing. And that trend was they were going up. And they were going up pretty consistently. And honestly, I was not surprised if we were going to see 8% soon. I already had some clients with not so great credit who were paying above 8%. However, those rates have pulled back because of really this bad news. And in this article here, biggest rally for short-term rates in decades. Why? Despite the announcement of a Fed Treasury FDIC backstop for SVB and Signature Bank, financial markets are trading as if current events imply a sea of change for economic momentum, inflation, and the Fed rate trajectory. It's pretty much that simple. What's not so simple is determining whether or not that trading will prove to be justified in changes in consumer behavior. Also complicated will be the task of reacting to economic data for the month of February, when the sea change wasn't even an idea until last week. And what will happen when all these numbers get reported? What will Chairman Powell do, and what direction do they take? Do they keep rates moving downward, or do they take action and raise the rates, or is the can just continue to be kicked down the road? Rates get changed for a variety of reasons. And like I said, the rates were trending upward, and our market responded here by saying, we don't care. We're still buying homes. Real estate will still trade daily. People still need places to live. And that was it. What we did see is a pullback in inventory from sellers who didn't want to trade in that lower payment because of the home they bought was cheaper than they could buy now. And also the rate they have is less. So when these rates have pulled back like they have, it will be an interesting metric to watch. So currently there are at, nationally 6.57. And that number will, again, this is a national kind of average here, looking from Mortgage News Daily, and a lot of different factors will play into what your actual rate will be. But looking at what mortgage-backed securities done, action there, and then also on the 10-year Treasury, two trends to pay attention to. But we've seen that pullback. Like I said, rates were above 7%, and they looked like they were going to continue to climb until today. We have seen them fall. So what does that mean here in Arizona? And I'm going to show you just, again, some basics. So this is our supply index, market index, and demand index. The supply index, if it is below 100, there is not much supply. The market index, 100 is balanced, and above 100 is a seller's market, below is a buyer's market. And the demand index, 100 balanced, over 100 there's more demand, under 100 less demand. So as you can see here, we don't have a lot of supply, but the demand isn't there either. However, the demand is higher than supply slightly, which means technically a seller's market based on the market index. But like I said, I'm calling it an aggressive balanced market. Real estate is hyperlocal by just even down to the neighborhood of how this number can change, and with so many different communities in Arizona. So again, we're going to go to one of my favorite charts to show you exactly what is happening. Now, inventory is still low. We're at 11,500 single-family homes for sale. And I'm going to get into this now in case you have to check out of this video early. But if we start seeing rates fall, here are two different scenarios I see play out. So a lot of these indicators and these metrics here, we're seeing a lot of lagging indicators. Now, if you have realtors and buyers and sellers who aren't really paying attention to the numbers, just my guess is we're going to see maybe some numbers not be as strong as this, because the people who are buying, at least when they close the next few weeks, went under contract when the rates were higher. So we'll see what those numbers look like. But let's, for the sake of argument, pretend that they're a little bit weaker because the rates were not as great and they needed concessions and maybe homes sat longer. And so we'll say home sales are softened. And then rates now are dropping. And let's say they're under 6.5. Maybe they keep going down to 6.25. And when those buyers are entering the market, and maybe agents and sellers are looking at the old data, the lagging indicators, and they're pricing it and acting as such. However, now we're going to have an influx of new buyers who are using, what feels like a lower rate to them based on, that 7+ rate that we saw. And now we're going to have back to more competition for those homes. Again, that is just one scenario. Or we're going to start seeing these rates falling, sellers are paying attention, and now finally they see their window of opportunity to where they want to move, and then now they're going to put their home into the market and inventory is going to grow. Now, at what rate that growth happens, that I do not know. But again, just some different scenarios, and I'm paying attention to, again, the daily activity, the homes under contract, the listings under contract, which is, what is pending, and then month supply and listing success rate. To me, those are some good indicators. Again, a lot of lagging indicators as well, but the homes under contract is one to pay attention to. Also, the expired listings, homes that are not selling. So like I said, with listings under contract, we are up from last month, up from last quarter, still down from 2 years ago and a year ago, but that is expected. Month supply of inventory, we're down to 2.3 months. So statistically, a seller's market. And a listing success rate creeping up to 80%, but not quite there at 78.3. Again, up from last month at 69, from last quarter at 61%. Again, this is as a whole in our market. And then the average monthly sales price of $533. So again, as some of these homes close and we start seeing what the numbers were that went under contract 30 to 45 days ago, it'll be interesting to see what these metrics do and then where rates settle and where they're at. So let's say you are at, where rates are around 6.5% and you have good credit. You can get into the 5% if we are negotiating for you and getting you that seller concession. So with a lot of buyers being aware of this and getting this, that's really helping them. Now it depends on if you want a full, life of the loan lower rate, or if you want a temporary buy down for 2 or 3 years. Again, that's up to you. I don't like to go into a purchase for a client, banking on a refinancing, because let's say when this blows over and the Fed does raise rates and now they are at 8%, well, at least you're going to be at a 6.5, but you could have been at 5.5 instead of being stuck there. So again, just it's very individualistic, but this is what we're seeing in our market. Now we'll keep an eye on this and see. Hopefully there's no other bank collapses, but I'm not going to hold my breath here. It seems like bad news does bring lower rates, but again, it's all up in the air at this point. See what the unemployment numbers bring, the CPI brings, and all of this, again, reports with inflation, and then the other issue with the government bailing out these banks. So a lot of change, a lot moving on. But again, when it comes down to people who are buying homes here, most are relocating here, want to buy. Really, the number I'm looking for is how does this affect the sellers in this market here? Will this cause them to put more inventory into the market? And if that's you, please reach out. Be happy to help. And if you're someone looking to move here, again, reach out, follow me on Instagram, send me a message, phone call, email, whatever works for you. But watch this next video and I'll see you on the next one. Rich Brecklin, Real Broker. See ya.